Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened last week, and what does it tell us about the coming one. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can find it there. Anytime, any place, you can view it. It's available to you on any device. We had another positive week, actually. The markets found a way to grind higher. We got the central bank largesse that came in end of the week, Thursday night, overnight. Got a big bop to the top side on Friday as a result of that, although the action was a little mixed, and we'll look at that. Markets just keep grinding higher, folks, and with central banks doing what they're doing, it's hard to see how this is going to stop anytime soon. As far as these markets, let's take a look at what we got here. If we pull up the S&P 500, so we got a bump up on Friday, gets up 2070, closes about halfway up. Volume expands though. And remember, we were coming out of this kind of a congestion consolidation area here. And if you draw it in real tight, right, you had the congestion there, then you had a 3-day one there, and then now another one up here. So it just keeps stair-stepping higher. And, if you're long, you love it. If you're not long enough, you're kind of wishing you were longer. If you're not long or short, you're looking for the razor blades, I guess, because this is a terrible situation for anybody that isn't participating in this move. If we take a look at the weekly chart, here you can see, again, nice big push up, 5 straight weeks to the top side. There's really nothing wrong with these charts that I can see. So if I'm looking at these and saying, okay, this thing's going to pull back, I think I'm really stretching to try to find that in these charts. Dow Jones looks pretty much the same way. There's really nothing wrong here. Again, the same sort of scenario. Volume picks up, spreads to a new high, extends. It's all good, right? Until you come over and you look at the technology sector. Daily charts. This was that Friday bump. Volume was there, so that's a good sign. But folks, that's an ugly candle on the daily chart. Now, the weekly doesn't look quite as bad, but still, you're kind of losing momentum as you're going up here. That Friday bar, really kind of a sore thumb. It's true on the composite. It's true here on the NDX. It was also true on the Russell. So, listed issues, loving it. OTC, technology, small caps, struggling to push higher. And maybe it's just, too much too fast still. Because, these are huge moves in 6-7 weeks. And consolidation, congestion, that's the sort of stuff that you usually would see at this point. And so a big test this week is going to be the Russell. Russell still hasn't been able to extend over this high. Remember, it got over it, back under it, failed to retest, regenerate higher, came into the second one, held that one, pops back up, ugly candle. Looks to me like it's going to test a little bit more here. But the big story is, can the Russell push over this swing point high and actually start to extend to the top side? If you look at it on a weekly time frame, you'll see what I'm talking about. Big, strong, fast push. One more day, one more bar up. That was actually a doji that I believe, if I remember right, closed under it is 1174 there. Yeah, closed under it. So you go over, back under after an extended move on a doji. And then what do? They shoot it up, get over the high, but then close at the lows. Another basic failure, right? Now you get another one. So you've kind of got 3 dojis on the weeklies in a row, but it's after a big move up and it is holding. So you can't, look at that and say, okay, this thing's going to break down, because it could just as easily break up as down at this point. Now, it certainly could roll back over and get some retrace. It tried to do that this week, or this past week. If you remember, I was talking about this past week was the week that we should see, some sort of a pullback. It was the best chance from a calendar perspective. This week, calendar-wise, is a typically positive week, right? Because it's Thanksgiving week, and that usually ends up being positive. So you're gonna have volume just dissipate. It's gonna go away. You're probably gonna have some volume Monday, tomorrow, a little bit Tuesday, but by the afternoon Tuesday, it's gonna be dead. It's gonna be dead Wednesday, and it's a short trading day on Friday. You got a lot of economic news this week as well, which could push these markets around. So I think you're going to see a choppy week as a result, but probably positive towards the end of the week, unless that economic data really surprises on the downside, probably. So that's kind of the way these things are set up. If I look at the market sectors, the major sectors, these are set up nicely. You've got the rotation taking place. We'll look at the dailies here. You can see the rotation here in the XLB. You can see rotation coming into this XLE finally. A lot of that has to do with what looks to be some sort of a bottoming process taking place on the USO, which is the oil. You've seen, things push up and come back down, like the XLY is starting to try to retrace a little bit here. You've got the XLP doing the same sort of thing. So, though higher, it could certainly get a retrace the way they're set up. And I don't know what's going to cause it. Maybe it's just sheer dead weight at this point after going so far so fast. Maybe, who knows what it's going to be. Now, whether it retraces or not is still a question. All I'm simply saying is you got 5 straight weeks higher. No retrace. Large percentage gains. All of those things beg for some sort of a retrace, but yet this market still hasn't. So you have to, as an investor, look at this and say, this thing can pull back at any point, which it can, and just live with it. I mean, that's, you can't sit on the sidelines forever if that's what you're doing. You have to be invested in a market that's this strong going into the end of the year. More than likely, you're going to see more push up even when it pulls back, if it pulls back. And if you remember, Thursday, it did pull back that morning, and it was immediately bought straight up that day. And then you got the big bump on Friday. So I think the markets continue to tell us they're strong, and they're probably going to be strong up until the end of the year. Now, the other thing that's starting to happen here is you're starting to see strength come in overseas. We haven't seen that. This is kind of a new development, if you ask me. Here's the Brazilian index. Big spike, gets over 2 swing point highs on the daily time frame. That one's starting to get some juice to the upside. You can see it here on the weekly as well. That had been a big drawback over, I don't know, the last month or so, since September actually. Here's the EEM, the emerging markets. You can see it's coming back in to try to get up into these swing point lows and do some retesting there. At this point, it has told us that it's a range trade too. Here's the swing point highs. It got over it back here. Now it's starting to push up a little bit more. I wouldn't be surprised to see it get into this next setup here before it's over. Get into the bottoms, these breakdown bars, get into the bottoms of the tops and all that kind of business. So, overseas now, and a lot of this has to do with, of course, what happened with the Chinese cutting rates and the Europeans. If we go over and look at the Europe, here's the German DAX. Big, strong moves to the top side. The CAC's the same thing. Even the FTSE doing the same thing. Money from central bankers continue to drive over and over the equity markets. It's been that way, it continues to be that way, and to somehow think that that isn't going to have an effect when every time before it has is probably not a wise thing or a wise way to approach the markets. Here's the DAX. I put it on a weekly, going after the swing point high, and then all you've got is another swing point high up above it slightly. So you got kind of a congestion in here, but after this move up, ABCD structure, well actually it isn't on the weekly, but it is on the daily. This thing's going to try to attack this area. And now that you've got Draghi doing his thing and promising the world again, and you got Chinese cutting rates, and you got the Japanese going suicidal on rate cuts, you've got the euro pushing to lows. Let's pop over there and look at that. If they do break down, that's going to push their equity markets more. So if I pull over here to FXE, testing the lows on the daily, if I pull over the monthly on it, you can see it's coming after the lows. Folks, if it breaks here, par is the next move. It's a good piece down. If you look at the where's the Japanese? There it is, FXY. FXY, just suicidal move to the downside. They actually tried to start talking it up again on Friday, but you can see here on a weekly the kind of extension this thing's getting. If you look at it on a monthly, same sort of thing. These markets, fast moves, strong moves, and then if you flip over to the dollar, this is kind of a risk area if these continue to just fall out of bed. If this dollar now takes off, and it has broken out, or not broken out, but it's over that high, if this isn't a congestion zone and comes back into it and starts to extend higher, that's going to be an issue probably, because the reason I'm saying it is just look at the size of the move that had taken place off the lows. So, oops, wrong bar here. Let's grab this other one. So if I come in here, this is a huge ABCD structure if this starts to extend. 21, what is that about? It's about $2 onto that's 24. It's another buck up. That's another 4% on a currency, which is huge, right? The leverage in these currency markets is tremendous. So if this dollar starts to take off, that again, I suspect, just like it did back in September, is going to cause volatility to come into these markets. So that's another thing I would be watching. So overall, you've got a few small signs like the TLT trying to push up, like the dollar doing what it's doing. A few signs, some divergences of things wanting to try and get some sort of downside action for a day or two at least. But for the most part, everything's looking up. And now you got the world markets doing the same. So I think if you're going to have a bias, the bias needs to be the upside. You got to find a way to participate if you're not, and if you are, you got to continue to participate until this market tells you something else. Okay, so let's pop over to take some viewer questions next. We actually have quite a few, so rather than doing any kind of a highlight tonight, I'm going to actually take viewer questions and spend some time on those. So without further ado, let's do that. I'll just take them in order here. The first one is Baba. This is, of course, Alibaba that came public about 2 months ago. Questions, all of these questions have to do with short and midterm, what I think about them. So you had a pullback. Well, first of all, let's go back to the IPO. The IPO comes out, trades up to 90 the first day almost, I think it was. Yeah, 90.48. Gets a fade, right? And then you get an ABCD structure to the upside. And then you had a bunch of hype again about what is it, Singles Days in China, I believe it's called. And so it extends over the ABCD structure. Now you're getting a pullback, and the question is it another ABC structure setting up? And it's possible that it is. If you look at the volumes, they look pretty good, The only thing that looks bad to me is this swing point high. The volumes on that high versus this high are lower. So in other words, you go up, you test that high, you have lower volume. Of course, that leads to the pullback. The issue on the way back up is this resistance zone. It didn't quite get up there to test it, but that's the test. If you get over this, you're probably going to test those highs and potentially take them out. If you can't get over it, then you're going to set up an ABCD structure back to the downside. And so this one, to me, given where it is right now, is a non-committal. What you really want to do is buy it down here if it had come back into that area, or let it break up and then try to get it going to the tops and potentially doing an ABCD up. Right here is a no man's land. So that's kind of the way that one's set up. The weekly charts, they're not really going to offer us anything because there's nothing on them yet. Really nothing there. I mean, you know, this is just telling you it can come back into that area we were just talking about. So that's Alibaba. That's a Chinese play. Sienna is another one. This is actually a telecom company. They do like transport switching equipment. So on the daily chart, let's see here. So it's starting to push up. Yeah, that doesn't look too bad. Let's look at the weekly on it and see what the weekly looks like. Okay, so you got a lot of pressure on this one. So if we're looking at this from the weekly, so we had volume here of 40.2. Okay, so you broke down, well, you tested with more volume, and then you actually broke underneath the swing point low. So, you know, what I'm looking at here is this. Big volume spike up. Okay, that's very positive. But then you kind of fade back in. That's okay. Now you start back up and then boom, something happens. I don't know if it's earnings. I don't know what it was. I haven't gone to look. But something happened here right at the beginning of September. You got the big push down. Now you're trying to push back up, right? Set up a ABCD structure. And really, you're going to try to come back in and retest, regenerate off of here. And now you're going to have these two bars, this one and this one, are going to be huge resistance on the way back up. So if I'm looking at it from a risk reward perspective, I can't believe I'm going to get more than about 18 bucks, 18.30 or so on the upside. I'm sitting at 16.47, so maybe I get $2 to the upside. Where did I put my stops? I probably have to put them under this low because it's a high volume low. That's 1377. So I can't make the risk reward make sense for me at the current price. Now that I've seen that, let's go back one more time here and pull up the daily. And here's that big bar. I can't make sense. I just can't make a story here to buy this thing. So I don't see a trade in it right now. Yeah, I mean, it can move up there and you could make money. Where are you going to put your stops, though, is the problem. And I guess if you wanted to take a higher risk trade, you put your stops up underneath this bar and buy it. That's 15.18, so you'd have to have stops. I don't know what the beta is, but it's probably going to put your stop down around 14.90 or so. You're trading at 16.50, so you're giving up $1.50 or so. And you're shooting for 18, did we say? 18.30, which is what? $2. Again, I can't make sense of the trade. I don't see the reward risk here. So that one probably is a hold and watch. You just keep monitoring it. If you're already in it, you just put your stops up underneath there and see if it can break higher and get you back up to a place that you can get out of. Next one, Genomic Health. This one, these guys actually do genome, genomic. I don't know if they actually do the typing. But I know that they use it for cancer research, the genomic research that they have. So let's see what this one looks like. Okay, these are always hard to read for me because they have a lot of bumps up and down. Okay, so so this top, 37.24, you got 851 on it. You get over it, less volume, so you basically tested the top. right? And you didn't have as much volume on the test. So this top, you test here, you have less volume. You pull back. I don't know if we had earnings here or what, but you get a nice hard pullback. Maybe that was just tied to the market pulling back like it did. It was coming back into this bar, it looks like. Was the test bar. Didn't quite get to it. Alright, so it did do a retest, regenerate off of this high and held. And looks like it had the correct volume. 934. No, it didn't. Hit it with more volume. Okay, so this top is 33.78, 33.69. Let's go back to the daily now. 33.69. Yeah. So what I would do if I wanted to trade this long is I would force it to trade back over that price point about 33.70 and hold over it, because then you could get a shot back up to 36. 36 is going to be a tough spot to get over. On the flip side, you know, if this can't get up and over, I suspect it's going to go down and test again. And that's the 31 area, it looks like. So again, I don't see the trade here yet. This one's not bad, but it's just, the trade's just not there yet. A reward risk isn't quite there. If it gets over it, you can take a shot, put a tight stop on it, you know, up underneath here, which would be 32.51 or something, and you're shooting for 33.70. But you know, yeah, you can make that case, but your probability of a stop out is a little bit higher. So that's kind of the way that one sets up. Long term, let me see what this looks like long term, because this probably has a good, yeah, it does. Yeah, it's right up there coming back to test all those highs. So this is not a bad one to try to find a way to get into it. It's just a question of when you do it. 38.99, 37.24. Yeah, I would, you know, the only trade I see on this one is the one I just laid out. Make it trade back over that 33.70 mark. And then you could take a shot at it. And if it gets up here and fails, then you can get out and you just don't make much. But if it can't get over that and stay over it, it's going to come back down and test these lows again. And then that's where you can look at it. You know, an ideal case to get in this is actually on a failure, to the downside. Come down here, right? Test these lows, have no volume, right? Because there's decent volume here, and then start to work up again. And that's where you try to buy it, is down here, so you can put your stop just up underneath it. Okay, so that's that one. Let's take one more here. What is this? Holly, which is Holysys Automation Technologies. Now this is an industrial equipment firm. They have they supply mostly Asia, the Middle East, with a bunch of industrial equipment products, technologies, control technologies, stuff like that. So they have a high volume high, 25.88, and you're coming back up. You got volume as you're pushing up. This is on the daily. All of that looks very positive, and this looks like on a weekly it's probably going to have an ABCD structure, and it does. And so yeah, I like this one. I think this one's ready. So this was probably not a bad one. You got a nice little ABCD structure setting up here to the top side. And if I look at the volumes here, you press with 2.4 and you hit it with 1.7. That was why you get the pullback, but you can see it's coming right back at it. So what you're doing is you're eating up that supply that's at that high and setting up for what looks to be a range trade breakout in an ABCD structure. That measurement is 20.50, 25, so it's about $5, about 28.50, 28 and a quarter. So you can see that one's set up well. This one actually is set up pretty good. The last question has to do with Germany, Europe. You know, Europe's starting to move. We just looked at the European index for the DAX and the CAC. This is, of course, the DAX ETF. Looks different, though, and it looks different because of the currency. And what I mean is this ETF is weaker than the index, the German index. And to show you that, let me just pop up the DAX, put it on a daily so we can compare them. So you can see here, this one's almost at the highs, the index itself. Now look at this, not even close. Why? Currency. Part of it is, a little bit of a fee associated with the ETF itself, but and dividends. They pay dividends, I'm pretty sure. But a lot of it is currency. Because as the euro goes down, you're buying this thing in dollars. As the euro goes down, you're losing value on it, and so you're kind of fighting the currency on the way up. What you need to do is go into a hedged, something that's currency neutral. There actually is one. It's called HEDJ. If you look at this one, now this one looks more like the index because it's got the currency taken out of it. And so if you're thinking about it, this would be the place to go, is something like this instead of the EWG. Same thing is true for Japan. You got to get a currency neutral one. The question is okay, now that we've talked about the currency piece of it, is it worth it? Well, Draghi's going to try to push money into this thing, and yeah, it looks like it's back over to swing point highs. It's a range trade at worst. Looks to me like it's going to test into these two swing point highs. So you've already gotten a lot of the move. The target right now is here. If it gets over that, of course, it's going to test the highs. So just like our markets, yeah, they look great, but how do you buy them? Where do you buy and where do you put your stop? That's the problem right now after 5 weeks of up and a huge percentage move. And so when you're looking at this has already moved 12%, 13%. It's pretty hard to find an entry at this price point. What you really want is a pullback into maybe 57 area so that you could actually get an entry and set up some sort of an ABCD structure to take it much higher. So I would be watching these to find that first entry spot and then use that as a way to get into it versus trying to chase it on the way up. I think that's kind of a dangerous thing to be doing. You can nibble on it, but the problem is that even if you do, if and when we finally get that retrace, you're probably going to be even money at best. 2 weeks ago, maybe it was worth it. 5 weeks into it, it's kind of hard to make that justification, even with the largesse of the central banks. Longer term, does it make sense? Yeah. So if you want to just say, okay, I'm going to average into it 20% here, 30% lower, whatever, yeah, you can make that move. You just have to realize your stops are going to have to be way down. I would think your stops need to be at the bottom of the support zone, which is about 51 bucks, and it's trading at 58. So you can see that's a huge hit. Going back, and I'm using HDJ here, going back to the daily, yeah, there's just not a lot of good places to put your stops. Maybe you could put your stop around 54.5 or so. Still, that's a large percentage. All right, folks, well, that's it for tonight. It's going to be a holiday shortened week. I'll probably not do a show on Wednesday, certainly not on Thursday. So just tomorrow and Tuesday. And, as always, I thank you. This is the time of the year that you try to consider how fortunate you are. And I don't have to remind you or tell you there's a lot of folks in this world a lot worse off than probably you and I. And I personally am very thankful for the life I've been given and the good things that have come my way. Of course, I've worked hard, just as you probably have. I've done my best to give to others just as I'm giving to you here. And hopefully, if I'm sure most of you probably do the same thing, and if you don't, maybe consider that. Try to give something back to those who are a little less fortunate than you. It is a week to think of that, to be thankful, and to be thankful for all the things, not just our financial, our health, our families, all of that. So with that, I bid you a good night. Have a great night, and I'll see you next time. Take care, folks. Good night.